All right, it's time to talk about West Portland housing market update. I'll give you year-over-year change and one quick home selling tip that's going to make a win-win situation for home buyers and home sellers in 2025 and more likely to 2026. Hey, welcome back to Sean Realty Podcast. My name is Sean, the Realty guy from Portland, Oregon. So the West Portland, it hasn't changed that much. The biggest change really is the days on the market. Days on the market almost doubled. Now it's about 90 days on the market, meaning it's taking about 1 or 2 months longer to sell your house. And likely you may have to do a price reduction because about 50% of the listings are having 1 or 2 price reduction to attract the offers. So this is time the pricing well for the sellers is super critical. Now, the second point that I wanted to make is that when you're pricing your house, you may want to have a little bit of padding to give some seller credit. And you may want to advertise that because seller credit, they can go toward paying down the prepays and closing costs. That's one thing. But if you can help the buyer pay down their mortgage rate, whether it's a temporary rate buy down or permanent rate buy down, the monthly affordability just gets improved so much. And so, for example, if the buyer's looking at 2 houses, same price, $543,000. $543,000. I'm using that because that's the median home price in the Portland Metro, 543 as of today. One offers the seller credit for, let's say, about $20,000, and the other one doesn't. The other one just go ahead and drop the price to $523,000. So it has less price, but if the $543,000, they make it clear that they're going to give $20,000 credit for the buyer's rate buy down. Now it becomes a different game because buyer who buys a lower price, $523,000, will pay more monthly because of the higher interest rate than the buyer who buys a $543,000 with a rate buy down. So the buyers are going to prefer this house. Even though they're paying more, their monthly payment is much lower. So that's how the car sales people actually sell. Car sales people, they focus in on what buyers have to pay monthly. Now, because of the home affordability is really the main reason why buyers cannot buy right now. That's why I think this strategy of helping buyers' monthly payment is a better way than just reducing the price. But if you look at those 2 homes, the seller net is the same. So you as a seller, you make the same money, but the rate buy down with the seller concession actually helps the buyer more, which means theoretically or practically, you're going to attract more buyers on your listing. And I made a 7% versus 6% and using the maximum credit more than $20,000 to give on the buyer side what you can actually negotiate. So now I'm looking at I'm putting my buyer's agent's hat on. Now, the monthly payment comparing 7% interest rate versus 6%, the difference is $336 a month difference. So at 7%, you have to pay $4,500 a month for a $543,000 home. If you can use a seller credit and drop that down to 6%, your monthly payment goes down to $4,164 a month. That's a $336 a month savings. But what if you get more seller credit and pay off that private mortgage insurance or mortgage insurance in FHA? Let's say that's about $280. Your monthly payment can go down to about $3,900. That's almost $600 savings compared to 7% interest rate and without getting seller credit. So in my opinion, for the buyers right now to give the seller more on the purchase price and have seller help you pay down the rate and hopefully pay off the mortgage insurance so you can actually save more monthly payment, because then you're going to save about $500 or $600 every month for the rest of that loan. If it's 30-year loan, just add that up and use that $500 or $600 as opportunity cost, what you can do with that. So there are different loan programs that have different seller credit limits. For example, as of right now, the FHA and USDA, the maximum seller credit is 6%. And the conventional with 10% down payment or less, that's about 3%. So if you have low savings right now, you're kind of like cash poor, but you still want to buy the house, this is a good time to use maybe FHA, because you could use the maximum 6% seller credit. And using the seller credit means when you put down payment 5%, including closing costs, you could only bring about $20,000 and you can actually buy a house. As long as you buy the house where sellers actually give you the credit so that they can pay down the prepays and the closing cost. If they don't, you have to bring about $47,000. That's the difference of about $20,000, 27 to be exact. But so this is where, going back to the seller's agent's hat, right? If you can help buyer actually afford by giving the concession, it's just a game changer. It makes huge difference. It's better than any other marketing that you can give than just seller credit. So why wouldn't you give seller credit? So I hope that makes sense. In the Portland, Oregon market, like I said, it's $543,000. That's the median sale price. Again, going back to that 6% versus 7% monthly payment difference is just on the interest, and that is $336 a month difference. And if you can pay down the mortgage insurance, that's additional $280. So the maximum saving in this case would be about $616 savings difference. And for the buyers, the money that you have to bring to buy drops about $20,000 if you can get the seller credit. So I hope that makes sense. If you have any questions in Portland, Oregon market, I'm here to help. You can call me. I don't think you can read that number, 503-515-4499. And I'm going to actually do a live video with Evan Swanson at Swanson Home Loans in about 45 minutes, but we're going to cover this. So, but I gave you every number that I'm going to share with Evan. Evan will probably bring some other key points too, but just know that offering the seller credit is one of the best things to make a win-win situation for the sellers and buyers in 2025 and 2026. Please hit the like button and subscribe, and thanks so much for watching, and I'll see you on the next video.